Thank you.
Hello, everybody, and welcome to this discussion. Good morning, good afternoon, or good evening to you from wherever you have joined. We are thrilled to have you in this technology imbibed webinar, The Future of Banking and Payments Innovations Driving Transformation. I hope you are having an ecstatic day. I'm Archana Nair from AI Cospot, your host for the day. Joining me are Nitin Naveen, VP of Innovation Strategy at AI Cospot, Arvind Kannan and Naveen Kumar, who will be assisting in keeping our discussion lively. On the screen, we have our esteemed speakers and the moderator who will engage with you in a few minutes. Before we get started with the discussion, let me give you a brief background about AI CoursePod. For over 3 years, we AI CoursePod have been on a mission to create a top-tier professional driven community focused on exploring and understanding the critical role of technology in various sectors. To offer an in-depth exploration of all the sectors that involve technology, we introduce a different theme every month, and happy to share that we have been progressively gaining momentum. Our goal is to be your go-to source for Industry 4.0 technologies. We prioritize industry-packed webinars, face-to-face and hybrid events, ensuring that our knowledge base is built on credible data provided by industry leaders, subject matter experts, thought leaders, and our trusted partners, InfoVision and Digit7. We enhance our knowledge sharing with digital content such as blogs, news, newsletters, podcasts to eliminate the ever evolving industry. Moreover, just to let you know, there is much more in store for the coming months, focusing on different technologies. So I would like to take this opportunity to kindly request you to visit our website at www.aicourspot.io for future updates. We would be delighted if you could show your love for us via likes and shares on our social media handles. It will keep you posted on everything we plan to offer in the coming months. Now let's dive into this distinctive webinar focusing on the future of banking and payments innovations driving transformation. Our expert panel will walk you through the evolving landscape of user behavior, digital wallets, instant and cross-border payments, the future of commercial banking, so on and so forth. Join us to learn how these innovations are shaping the financial industry and setting new standards for customer engagement and operational efficiency. If you have questions, I request you to put them up in the question and answer section, and I'm sure our moderator will take them up as and when possible. Moving on to the speaker front, we have Gretchen Rodrigues, Head of Product Payment from TD, Miriam Sherrill, Head of Product from Form3, and Brett Fish, Associate Vice President from InfoVision, who will be moderating this discussion. Special thanks to our community partners, TD Bank, Form3, and InfoVision. Now, here's a small disclaimer. The views shared by the speakers are their personal ones. They are not related to any organization that they represent. Given that, I request Brett to take the panel forward with a much-awaited topic of discussion. Over to you, Brett.
Thank you for that. Yes, and good morning, good evening, good afternoon, wherever you are, attendees. Thank you for joining today. We've got a wonderful topic. We have two great panelists, Gretchen and Miriam. Thank you for joining us today. Looking forward to our time together as we kind of navigate through the future of banking and payments and kind of dive into that discussion. So why don't we just get right into it? Miriam, I want to kind of get started and talk a little bit about legacy systems and cutting edge APIs and technology and how banks and institutions are leveraging these technologies to transform banks and add to the scalability and performance and how that's all tied into competition and exceeding customers' expectations. Let's kind of get things started there and take it off.
Thanks, Brett. Yeah, and welcome everyone, and hope you enjoyed the discussion. I am known to be a chatterbox, as Gretchen has reminded me before this, so I'm sure it'll be lively. Good opener, right? Because we're talking about innovation. So what else can you talk about if you don't talk about technology? There's really no way to be innovative in any space, let alone payments, without looking at technology and kind of the newest technologies that are out there. So I'll briefly touch on Form3 a little bit, because that's kind of why Form3 came into the market to begin with. So the idea was looking at the back offices of banks, and hopefully Gretchen won't yell at me, but seeing that much of them were outdated, right? And it was kind of slow and it was very difficult. And as new things came into the market, so we'll talk about this soon, but something specifically like instant payments, which might be like my first love, don't tell my husband, but there's no real way to enable instant payments without modern technology, right? The whole point of it is that it's 24/7 and that it has to be really fast and it's going to have really high performance and stuff. And how do you do that in the systems that exist today, which are batch, right? And have overnight processes and systems that have to go down and do maintenance period? You honestly can't. If you don't look at cloud technology, which lets you be up and running 24/7, which lets you be really, really secure, where you can kind of like pop up servers, for lack of a better word, and take them down, you really can't support it, at least not in the way that you want to support it in the future. So we know that many banks have kind of used some outdated technologies to get going, but even those banks are looking at modernizing. Same for APIs. I mean, is there any bank out there or customer who doesn't want to be enabled with an API so that it can easily and seamlessly interact with whatever system it is, so that they can expose it to and build out more products on their front end for their users? Like, the way to do that is with an API, right? An API, I'm sure everybody who's attending this knows that, right? But an application programming interface. So it's really a way to exchange data, right? Really easily and quickly. These are some of the newer technologies that are out there. And without them, some of this kind of new products and services that we want to enable that are going to kind of help everybody are going to move us into the future. And maybe the last one I'll talk about, and I did save it for last just because I feel like it's the topic that everybody talks about, but it is artificial intelligence and machine learning and that space. And I think as much as it's talked to death, it is also critical and really important. Like, I don't know any of you, but ChatGPT, like, just the concept of it is pretty incredible. It really can do something that you never would have thought we would ever get to. And that's going to exist in the space of payments specifically and banking, especially when it comes to fraud and combating fraud. Like, the fraudsters are already there. They're always ahead of us. They're using that. So if we can't take that to use it to combat it, we'll just never, right? We'll never be able to manage that. So honestly, there is no innovation without technology. I think that's going to be my motto, and I'm going to stop
For the
there.
day. I like that. Very good. Thank you, Miriam. Gretchen, anything to add to that, or perspective, obviously, from the banking side and kind of how those things tie together?
Yes, I just want to add one more aspect, that is we're hearing a lot about orchestration these days, right? And how banks and the different financial institutions will need to consider rerouting options based on cost or processes or efficiency overall. So I see more of that happening. I was attending a conference at the beginning of this week, and it was all about orchestration, but with that intelligence and context now. So I think that will be something that we will be hearing more and more in the next years to come.
You can't do that, right, without technology, like, because all of that orchestration and routing requires fast decisions, APIs back and forth, data. And so without that type of technology, you can't enable those kind of critical solutions.
Right. So we've talked a little bit about kind of the back end and the technology being leveraged by whether it's banks or other institutions, providers, etc. Let's maybe shift a little bit and, Gretchen, talk about user behavior and how banks will kind of react. What are we seeing from aggregation and tech wallets, and how is that shaping up behavior? What are some of the strategies for banks? What's relevant there? Let's kind of talk a little bit about that perspective.
Yes, Brett. So in terms of user behavior, there are a lot of pieces moving as we speak, not only from the user itself, ways of interacting, again, wallets taking even bigger relevancy, but even if we think about patterns in terms of gaming, for instance, we see more of that happening with our users. But at the same time, we see the big players, the big tech players like Apple and others changing the game as well. So I'll go back to the first bucket. If we can think about the consumer itself, there are multiple things changing the game today, right? One of those is how we interact, right, with our banks, with our payment methods. When we think about new products common like Pays on the wallet space, or when we think about our interaction with the Apple Wallet and all of that, the difference is big, right? Definitely, we can see that wallets are replacing some of the debit usage, and that's something that is happening as we speak. We see the users probably preferring to interact with more machines and less with humans. And when you go to the grocery store and all of that, so some of those unattended methods to pay, we seems like after COVID or during COVID, or we had it before, I don't know when things change, but we want to interact less with people somehow. So that behavior is happening. And another consequence, and it's definitely a big difference coming after COVID, is the gaming industry, right? When we think the industry growing and we see new players coming, incorporating real-time payment for cash out happening probably at the end of the day is on Thursday. Just people I want my money now so I can spend it during the weekend with my real family or real people, while I play during the day, during the weekdays with the FanDuel and all of these big players, right? So that is happening. So that's a reality that's dictating where we want to interact, how we want to interact. There are other dynamics like family, for instance. We are probably more connected with our friends and family, probably because that's the only way to, I don't know, buy a house or to probably make ends happen sometimes. Like you need to collectively have those interactions with your family, right? That's a reality that we're seeing country. And we see players like the Michigan bank that they launched a solution, so you can definitely request loans from your friends and family. So a little bit of the game is moving into those directions. And when we think about other players like Apple, for instance, and all the conversations happening in Europe, they are starting in Europe, and the possibility of us seeing the data, our data from banks flowing and being present on the as aggregator, aggregated and present in the Apple wallets and all of that, that poses a position, okay, what is going to happen, right? Are the users going to still log in the bank, or are they going to just see the data in the wallets and that will be enough? So what is going to be the strategy for banks to attract the users back? So it will probably be about offering different interactions or probably bringing products that are not necessarily present in the wallets. But that will be something that it's going to change the game. So those are some of the aspects, as Miriam was mentioning as well. Even if we think about governments, right? Like what is going to happen again with FedNow at a certain point? Are we going to get our tax refunds through FedNow? So I have to be with a bank account in order to receive those. So that might be one of the reasons why I want to continue going back to my bank account. But again, everything is changing in terms of the different layers as a human being, as an organization, and the tech players, and also government and beyond that. So it's quite exciting, the times that we're living today. And what is interesting is that we work in the payment industry and we are aware of those pieces, where we are seeing also that awareness coming from consumers and from companies saying, oh, what is happening here? What is this new innovation with buy now, pay later, etc.? So it's not a conversation that is exclusive for those that work in payment. It's more of a mainstream discussion, and I think that's pretty unique at this point.
Yeah,
no,
I guess.
absolutely.
Yeah.
Go ahead, Miriam.
So, I mean, I think Gretchen's viewpoint is so valid and accurate. And if I can be a little cynical, not always the viewpoint you hear from a banker. So kudos to you, Gretchen. But like, that's because it is what every banker and every person in payments should be thinking. The wallets that are out there, the new companies that are out there, those that are, more modern and have enabled things that like, it's the experience like Amazon, right? I feel like Amazon a little bit changed the world for all of us. Everybody expects this like instant, real time. I can just buy what I want. I can get it overnight. I can get it in 2-hour delivery. All this kind of like fast paced moving, enabling all these new concepts and ideas. And I mean, if you go to Amazon that used to start as books, how many different offerings and products do they have there, right? And consumers, even me as a consumer, right? Like we just expect this in all aspects of our lives, including payments. I feel like payments used to not be that way. Like a payment was a payment. You wrote a check, you had a credit card, maybe you did a wire if you were buying a house. Like that was it, right? And
Are we showing our age?
We're showing, yeah. But now we don't think of it that way. Like consumers, how many times have I showed up at a store with just my phone because I'm like, oh, I'll just like tap my phone to pay. And the one store that wouldn't let me do it, I was like, I'm just not going to come back here because, like, frankly,
Yeah.
I don't walk around with my credit card
The
anymore. So
convenience.
I'm going to shop somewhere else. That's what's happening. And for banking, especially banks, they have to think about that because the reality is consumers will just go to what's easier. They don't really care. Like, we're in banking and payments, so we think everybody like really cares about the things we care about. Well, it has to be a bank because I trust it. You know what? I try to talk to my family about like payments and like FedNow, and they're like, whatever. Can I pay? Can I get money? Like, we need, like, that's
When
all
am
they
I?
right? So the easier you make it, that's where the consumers are going. And I think banks are falling behind if they don't focus on what Gretchen just said. Like, we need to compete. Banks need to compete. That's what it is. And they're not just going to get it by default because they're a bank. So it's really important, and it's a perspective that I don't think you hear enough of. I think there are just too many banks with maybe people who are showing their age, to your point, Brett, that are still kind of set back on, I'm a bank. A bank's going to be safe always, that there always needs to be a bank account. And it's not true. There's a large population that are not banked. They don't have bank accounts. They do just fine. And there are more and more products enabling them. So I really think that's the focus of the innovation, especially for bankers.
No, absolutely. And Miriam, maybe we can stay on that point a little bit around instant, right? Instant with the internet, right? We get bogged down when the internet's slow or stuff's not popping up instantly. We talk a bit about instant payments and seeing that money arrive or show up quickly. But let's talk a little bit more about kind of just the instant payment trajectory in the US, starting with RTP and maybe adding in FedNow, and then how that compares to global markets and what's different, what's the same. Let's maybe jump. That's a good point you brought up. Let's kind of jump into that one a little deeper.
So I shouldn't take the whole rest of the hour, right? Because I could talk about this like till I'm blue in the face. I don't know what happened when I used to work at the Fed, and I worked on FedNow, and I was a part of leading the delivery team, and I became like this instant payment geek. Now it's all I talk about. I think it's the new world. Yes, it'll take time to get there. I think many of us, especially those listening, are probably very familiar with this space. It takes time to get there everywhere. So I'm actually going to start with one of the later things you mentioned, Brett, and just talk like the global world and what we've seen in instant payments. If you've been going to conferences for the last 10 years, all you've heard is US is behind. They don't have instant payments, blah, blah, blah. RTP has been around for almost 8 years now. FedNow obviously went live last year, about a year ago now, almost. So we do have it, but just like, let's say I'll go with the UK. So Form 3 started in the UK, and we process like over 50% of FPS volume. So we've really seen the trajectory of what's happened with FPS, which is their faster payment, system. They started with low volumes also, right? They really did. And it took a while to get it going. It's a chicken and an egg. You need adoption first. All the banks need to get on it, right? Nobody's moving a use case to do payroll if the payroll will only hit 20% of their employees, and then the other 80% still have to go through ACH. Like, that's just, there's nothing in it for a bank to enable that, right? So it takes time, adoption first, then volume grows, all of that. For FPS right now, they have huge volumes. So they've really grown that market significantly. Europe, SEPA Instant hasn't seen it yet. Then you have places like India, Brazil, where it's huge and the volumes are astronomical. So what are some of the differences? Brazil and India really enabled end users. So I do think that is something that has to be looked at here in the US as well, even in Europe and the UK still. They've enabled it through things like PIX and other solutions that really have it from an end user perspective. Because I said before, right? Like, at this point, I go to a store, I tap my phone. That is how I pay for things. If I could tap my phone and that would be an instant payment, I'd probably use that as opposed to a wallet or a credit card, because as a, should I say younger? I guess I'm not younger, but as the younger generation will tell you, they don't want credit cards anymore. Like, they're over it. We are all like, I'm like, why? I get cash back. But really, there's a fear of credit risk. There's all these other things, and just money in and out that's instant and direct and irrevocable is easier and simpler. You don't have to think about it. But they're not using it yet, because how can they? Right? Besides the fact that we don't have so many banks enabled yet, and even when we do, they haven't opened up send, definitely not to the consumer end. How does an end user actually go and use it? What do they do that makes it so simple? They have to do anything more than literally one step, they're not using it. I wouldn't use it, even though I'm building it and really want it to get used. Like, I still wouldn't use it when I go to the store and want to buy my groceries. So Brazil and India, I think, did it right. Will we get there in the US? I don't know. It really takes a lot, and it actually takes innovation from the whole industry. So I think that's one of the missing pieces, right? There's a lot of focus on the clearinghouse and the Fed, and have they done it, and have they built it, and are they doing enough, and what else can they do? And that's great. Obviously, we needed the rails and infrastructure built, but quite frankly, they're built. So now it's on banks to enable it, and it's on fintechs and others out there to go build out solutions around it, right? Once there's
regulation slows some of that down too. I mean, obviously there's regulation in the US as well as in other countries, but do we stifle ourselves to some extent because of regulation and over-regulating?
You know what? I don't think the regulations is stifling. I think it's a different issue. So where mandates happen, obviously that is very helpful. So in FPS, there was a mandate. Every bank had to be Receive. If in the US, we won't do this, but if in the US they mandated everybody has to be on Receive, obviously that would help. It would like give a kickstart, right? It would jump us forward. But I don't think it's really that, like that's the issue. I think that's what will make it take a little longer. And from the regulation standpoint, as far as kind of like the rules around it and stuff, it's not so different than a wire. It's not exactly a wire, so nobody quote me. These are my views, not the Fed's views, not FAR3's views, blah blah blah. But it's not really that different. So there does need to be more built out around it, especially around exceptions, returns, cancellations, that type of stuff. But that'll happen as volume grows, right? Because you have to have some market, you have to have something using it first to really build around those what's needed. So I don't think it's regulations per se. I really think it's innovation. Back to the point of this, like products will get built out. That will be the kickstart. That will push things forward. When someone builds out, and you see it already, there's little things happening. I remember listening to a podcast like 5 years ago from a college student that built out some app for their college campus so that everyone can like pay their rent loans, like for their boardroom where they board, through RTP. And it was like an instant enabler for like the bank that the college used, because everybody was able to just like send their money to RTP. I think as those things get built out at scale, that will drive the volume forward, and that'll really make it happen. But it's going to take time. So like I think when everyone's like, why is it so slow? Did we really expect it to go so much faster? The US is huge. It's 10,000 banks. It takes forever. Things have to happen. Steps have to be followed. And then Gretchen, to your point, obviously, you know, the Treasury is on FedNow. They announced that. They have not moved tax payments over yet. So ACH hit ubiquity when tax payments went out. Like that's when every single bank had to at least be able to receive, because what person isn't going to switch banks if they can't get their tax payments that way and they have to get a check?
Yeah.
So I think that will, I don't know that it's coming anytime soon. Like I really think the push right now is get banks on it, get them adopting. We also have, you know, FedNow and RTP. So we have two services. It's not different for the US because that's what we have for wire and chips. That's what we have for Fed ACH and EPN. But that is still a dynamic, right? We know they don't interoperate. So banks have more work to do. There are obviously providers out there, myself included, that kind of make that simple and seamless. And it's like one connection. But regardless, it's two services. It's two funding pools. You know, you have to think through things like that. So it's going to take some time. But in 10 years, I truly feel it's going to be like the iPhone, right? Like iPhones came out and most of the world were like, huh, why do I need this? Like a thing in my hand? That, who in the world doesn't walk around with a smartphone now, right? It's like Bluetooth also. Like people walked around talking to themselves and you were like, this is the weirdest thing. It's never going to take off. What phone doesn't have Bluetooth now? Nobody would buy it. So I think at some point we will see that shift. What bank won't enable instant payments? Who in the world would use them? Like we're going to get to that mindset.
Yeah, and I want to add that it's a clear position that banks are at this point. Like, okay, should I go with RTP? Should I go with FedNow? Should I go with both? And then in the meantime, it's okay. There are other things that I need to take care of, like the wires and the ISO 222 regulations and the mandates and all of that. So it's bringing some of those conversations and go back to the technical enhancements and where do I put the money? Should I take care of this now? Should I wait and take care of this later on? So that's also a reality versus other countries, like you mentioned, Brazil. It's a very interesting case. So today in the US, I think it's around 1 or 2% of the transactions that are happening in real time. In Brazil, is 29%. So the difference is huge. But again, it's also in our countries in Latin America, we see a little bit of what I call the 0 to 100 effect. That is, okay, I don't have money to buy a computer, but suddenly I buy on a smartphone. I do everything on the smartphone. So I'm 100% native. So kind of the same happened with payments. Okay, maybe I cannot go to a bank and send a wire, but suddenly I'm using real-time payment and fast payment and all of that because I have my phone and I can make it happen. So that's a reality that is very different in the US. So that all of those nuances are definitely dictating the volume and the speed for adoption at this point. So we just have to wait and see, but we will have to go there no matter what. It's the organic way of moving, right?
I mean, your point on banks' decisions is really critical. That's all we hear at Forum 3 as we talk to banks. Like every single bank wants to talk about it. They're interested in the market, and then there's delays because, to your point, other things are coming and they're mandatory. You have to move to ISO for wire, right? It's happening in March 2025, and if you don't move, you're kind of screwed. So that has to happen first. They're like, okay, we'll delay this. It's very hard. And Gretchen, you can tell me if you're not experiencing this, but it's very hard for a bank to come up with a real ROI business case that pushes them like, I must do instant now. That's that's what we get asked the most. What's my business case? How am I making money off of this? What makes me say I have to do this right now? And that's a hard conversation. While I strongly believe those banks are going to really feel it in 2-3 years when they're not on it and they start losing customers, that's a very hard business case to prove, right? Like you can't put on paper, like you have to do this because these 55 that million payments are going to go somewhere else because these customers are going to move. There's no way to quantify that, even if you think that's going to happen. And so that's being a big struggle where banks want to do it, but really it just gets pushed for other things that have to happen. And we hear that left, right, and center. So that's definitely a factor.
Yeah. Painting on that cost of opportunity part, I think that is at this point the best bet that we can do if we want to convince others. But yeah, you're right. That is a good one.
Very good. No, great conversation. Appreciate that. It looks like we've got some questions coming in from the audience. So let's maybe take this first one here and let you guys both kind of weigh in on it. But the first question we have coming in from Sandeep, can you please discuss the growth we're witnessing in online banking, open finance APIs, and what factors are contributing to this trend? You guys want to tackle that one?
With the open banking and the growth, and yes, definitely, I can start with some of the angles that we're seeing in the industry, right? Definitely, there are at least two use cases that are quite interesting. No, when we think about pay by bank, that's definitely one of the biggest use cases that it's becoming more appealing in terms of open banking, right? So that's definitely happening, and we see players like Airbnb already implemented pay by bank, Uber, and others that we use in our regular life. So that's one of those interesting use cases. There are other ones from the banking perspective, like account funding, for instance, or even P2P, if I want to leverage sending money between the accounts. That might be a little more sophisticated, but that might be an interesting use case. So what we're seeing in the industry is definitely the fragmentation, right? When we think about the Platts of the world, Akoya and Jodly and some others coming and bringing a different value. But at the same time, I think we are at the point where open banking is, and what these players bring to the table is almost like a commodity, right? Okay, you are bringing this, and so what else are you bringing to the table now? So we're seeing some of these players moving into the fraud part, or even the onboarding with a new feature that Plaid launched literally last week or this week, the layer to accelerate the onboarding experience. So that's where things start to become even more interesting, where it's not only about moving the money, but it's also about authentication, identity, and being able to just fast track the onboarding process, for instance. So definitely the scheme is it's quite it's growing. No, when we think about the different players, when we think about even the networks partnering with some of the open banking solutions to accelerate some of these flows. And what I like to think is that at some point the open banking will continue becoming more of a commodity, and it's what else are you bringing to the table to build that layer. No, so to build those layers. So that's how I see it. I think in Europe it's a little different, but it's quite exciting what is happening at this point. And it's also posing a conversation around tokenization, right? Like, okay, what else it's not only about open banking, it's also about security, tokenization. What are the other services that you can accelerate on my behalf? And we are definitely seeing some of those beautiful applications when we think about even Akoya and open banking as an open banking provider just for account funding on Bank of America, for instance. That was an interesting use case. So more and more of those will be happening. But again, the big goal is for this to be seamless for the user. Like, okay, don't show me the screen like who you are, like who is who. Like, I don't care. Like, if I'm transferring money from Bank of America to whatever other bank, like, I don't want to know what else is in the middle now. So I think that will be the bigger challenge, going back to the technology. How can make it seamless so the frames and everything is not disrupting my experience or bringing some of those timeouts and all of that. So I think that would be the biggest point, to be honest.
Yeah, so I'm not usually pessimistic. I think you can all tell. I have a slightly pessimistic view on this one. I do think we've made huge strides in the US with open banking, with open APIs. My worry is the US has two issues. It's huge. And there's so many financial institutions, whether they're banks, large banks, whether they're credit unions, whether they're regional banks, whether they're right. And they all have like these different needs and different ways of working and different solutions. And it's really, really hard to come up with a standard from an open banking perspective that's kind of like more community grown without, and I don't want to say a regulator, but without a body that helps enforce or push out standards or make this kind of like a mandate or have like some type of organizational structure around it. And nobody's really come out with enough of a, I would say, power or role in this space to help with that. There are different pockets that exist. But again, with such a wide spread of institutions and way of working, it's why the US is a bit unique, which I know people hate when I say that, especially because I work for a UK company and I'm always like, US is different, but it is. It's not taking off in the traction that I thought it would when it really started. Like, I'll just be honest. I thought it would go so much farther because it can do so much. It can enable so much. But I feel like that body isn't there to help it really move in that direction. And then the other thing is Americans aren't the best collaborators in the world, to put it politely, and it really requires collaboration, right? Like, this is where banks and fintechs and developers like all have to really talk and collaborate and share data and be willing to like discuss what data do, and we're not great at it. And I think it's really limiting us. So that's kind of two things that I think are holding us back in this space. But I think it's huge and it can enable huge things. And we do already have areas where it's helping, right? Like, you think about something like, well, they don't exist anymore, but do you guys know Mint? Like, I used to use Mint all the time. There's other solutions now, Quick and Simplify, whatever. The way they kind of built their solution to interact with every single different bank or thing that you might want to pull your account for was through open API concepts, right? It's how they're pulling and doing that. But even there, like, every specific bank had to enable it. And there was so much work that they had to do to put that in because there's no standard of how the banks would do it. So it's very hard right now to build out those solutions. If it was just a bit easier, more standards, more collaboration, I think we'd have more products coming out, more competition, more enablement, ultimately more end user satisfaction. So, I mean, that's my view on the topic.
Oh, thank you both for that. Great perspectives. Gretchen, you touched on something, and I maybe want to shift gears a little bit. You said B2B. We've talked a lot about consumer, but we haven't talked much about commercial banking. Let's maybe go into that a little bit more with regards to commercial banking and the old school, just write a check, go into the bank kind of, mentality and approach. And let's kind of talk a little bit about what's happening on the commercial banking side.
Yeah, so if we take a look at some of the numbers today, right, around 40% of the B2B payments that happen today happen through check. So that's a reality. So that put us in a position, in a hopeful position to say, okay, there is a big room for improvement here. No, so and that part is it's something that we're seeing some of the disruptors coming. No, when we think about, okay, can we enable virtual cards, for instance, for commercial? That's an interesting case. Can we expand that more? Can we actually bring solutions to connect the ERPs with the traditional treasury systems that banks have, or with companies like Fispan and others, just bypassing that relationship and bringing some of the Rails capabilities? So that is happening, different use cases, not only about account and disbursements in general, but also about payroll, for instance. That's an area that I think it's been disrupted as well when we think about EWA and other services that are definitely changing the game, for the employers and employees. So that's definitely happening, Brett. And there are a couple of interesting cases that are around, again, disbursement. When we think about, okay, maybe as a commercial client, I probably need to wait until the last minute to push my funds out, and then it's okay, I probably need to have a real-time payment solution, and then I can wait until Saturday. My due date is Sunday. So that is changing the game, and it's putting in the position where clients and customers are requesting those solutions, so I can play with my treasury amounts and all of that until last minute, right? Instead of, let me hold these funds and wait and pay now 3 days before, so you can receive it by the due date. So that's a reality that is happening there in the commercial world. And I also like to differentiate the SMBs from the big companies, because I think the game is a little different, right? When we think about SMBs, there are other solutions like Tap to Pay and even Zelle that are definitely covering those needs. But when we think about big commercial clients, it's like, how can we shift the game, instead of continue paying using the files and wires and all of that? Are there new solutions that will allow you to pay using RTP, or even take your certain rails and offer you solutions on the fly, saying, hey, maybe you don't have the funds right now, why don't you request a loan on fly, and then you push your disbursement right now? So there are other type of intelligence that needs to be applied from the banking perspective. But at the same time, for the SMBs, for example, we are seeing that behavior that is, okay, let me just probably go through the Melios of the world or through bills, and then hoping for those platforms to offer me other solutions that are RTP or even FedNow. So I can feel that I'm building my own stack. So that decision is happening also on the company side. So the game is changing a little bit. So we are seeing some of the, I don't know if you're aware of the announcement from the region bank partnering with the bill company to offer some of those account payable solutions. So again, it's like, if I cannot build that in-house because it might be costly, can I partner with some of these choices that the customers are already tapping to offer around the solution, to offer a name behind that, it's your money, it's covered end to end. So I think we might be seeing more and more of those movements happening in the industry. I know we always talk, coming from a fintech world, and also from Santander Bank and now TD, we always see that relationship between the fintech and the banks. And at the end of the day, there is an opportunity to make it happen. Like, if I'm not fast enough to go there, can I go with someone that will allow me to move
Absolutely.
as fast as I want? So hopefully we'll see more of that. I know with Form 3, that's a beautiful sweet spot to accelerate some of those interactions. So I think that will be the path to tackle the commercial needs, Brett, to be honest.
Yeah, I mean, okay, you said so many points that are valid. I should just be like everything she said. I will add, the use cases being disrupted, I think, is key, right? So we're seeing it in little pockets, but in the B2B space specifically, I think that is actually what will probably drive banks to implement RTP and Fed. Now it's when their businesses and their big corporations will be like, listen, you either let me do this or I'm going somewhere else. I think we're going to see it in real estate hedge fund companies specifically, leaning those people who want no lives and they just want to work all the time. They're going to be like, you got to let me close on a Saturday and send my funds instantly, or I'm going to someone else because I'm going to lose that deal. So we're going to see like that little piece. Payroll, definitely. I mean, I think it started with like emergency payroll use cases, but I've even been to a store where I saw like a thing and it was like, if you work here, you get paid daily. Like end of the day, money just goes out. They're doing that through, an RTP solution, I think was that company. So I do think we're seeing like little pockets of these kind of business to business or business to consumer, sometimes use cases that are opening up from an instant payment perspective. And then the other point I think is so valid is the partnership mindset that banks and fintechs should have. Like competition, yes, from the perspective of let's make it all better, but then really the banks that want to build everything themselves, they're going to fall behind. And we face this, like, so Gretchen did my job for me, right? But like Form 3 basically offers a solution that's not specific to any one bank, right? It's the same for everyone. Any bank that's choosing to build that themselves, like their executives should be turning around and being like, why am I building something that is not specific to me at all, when there's more than just Form 3, right? There's multiple providers out there that will do it better, because it's all they do, that will do it on the most modern technologies. And I think the banks that are still in that mindset of like build myself, they're going to fall behind. There's only so much you could build yourself and do really well. But if you're willing to partner with the expert in the AI area, the expert in the backend processing, the expert in, the products Gretchen mentioned, you basically can have the best of both worlds, right? So I do think that mindset has to be really focused on, like, this is a partnership model that will open up opportunities for everyone.
No, absolutely. Thank you for that. We've talked a lot about in-country. Let's maybe shift a little bit and talk about cross-border payments. Miriam, if you could spend some time talking about cross-border payments, where it's working, where it's not, what's coming down the pipeline in that particular area.
Yeah, I mean, unfortunately, down the pipeline, things aren't coming that we want it to come as fast as we want. So, I'll go back to, like, if you were at conferences, because I always think about that, especially from instant payments. Like when I went to Money 2020, like many moons ago, again, without aging myself, I won't say how many years, but that's all everybody talked about. We need instant payments. Why? Because we need cross-border. Like, really, that was the conversation. We need instant payments because we need cross-border. Because right now, if I want to send money to my mother somewhere who lives somewhere else, it takes forever. It costs me a fortune. I don't even know where all those fees are going, right? And it's not efficient, especially to a large part of our population that doesn't want to lose those dollars as they send money home. Like, they actually came to America to work, to send money home. Like, there's multiple use cases here. And that's all everyone talked about. We need instant payments because we need cross-border payments to be better, because we need it to be more seamless. But we're not there yet at all. We're actually not there anywhere yet, really. There is really no cross-border instant payment. So obviously we have cross-border in the wire, world, in that type of mindset. But that is expensive and slow and, frankly, very not enabled from an end user perspective. I mean, I don't know how many of you have ever sent a wire. I have. Even if you have a bank that enables it for consumers, you got to go on, you got to fill out like insane amounts of documents, and you have to sign your life away. And then it's like a whole thing. It's not easy. There are fintechs that are out there, right? I think Wise is one, that are enabling this sort of. But again, in the back end, it's really not so seamless, and it's painful. And so as much as sometimes it feels seamless for the end user, which is good, it's a great start, sometimes it really doesn't, because something gets stuck somewhere, and then there's like exception processing, and it's really difficult to understand what actually happened. So we need domestic instant payment first. I'm not like, this is not saying like RTP Fed that they should be doing more, because they can't, right? You need it to be enabled in your market before you can enable it between markets. But we do need to get to a point where we enable the connections between the instant payment rails across the globe. The clearinghouse did, have a proof of concept. They called it IXB. They were looking at this, especially with Europe and UK. I think it was paused. I believe they're restarting those conversations now, which is great. And it was really looking at, how do we start looking at this? How do we start enabling this, right? Technically, it's not so challenging. Like, this isn't really where technology is at play. I think especially in an instant where most of the instant payment solutions around the world are already 24/7 and kind of running high tech. But this is more of a kind of a regulation perspective, a bank rules perspective, and it's different in every country. So as you try to enable cross-border globally, it's looking at all of those things, right? It's like one leg over here, but then it's one leg over there. And how does that work? And what are the rules around it? It's going to take time. I know I keep saying that on everything, and it's very depressing, but it will take time. I do think that with like the clearinghouse already pushing on it with IXB, they see it. I think FedNow will look at it as well and will pursue it. And we will need to get there for instant payments. ISO, which we haven't really talked about, will help as well. So ISO is, ISO 20022 is kind of a standard that many are starting to use. And as more of these global payment systems use it, while it's not the same, I think of ISO as like, there's a standard. And then every single system decided like, well, I'm going to use my flavor of the standard. So it's kind of the standard, but it doesn't matter, because it's still all sort of aligns, right? It's close enough that we can move things together. So that will really help. And I think we will see that with chips already on ISO and Fedwire moving to ISO. We've already have kind of the CPMI work group that I did a webinar with Frank, who's, I don't know if you guys know Frank, but he's basically like ISO guru. And he's on that work group, and he's talking about how they're really using it to focus in on ISO and how do we make the standards work for a global perspective, so that as even wires are moving there, that happens and gets better. But then even more as instant payments is implemented and adoptions are growing everywhere, we can use that to also help us kind of connect everything. So it will take time, but it is coming. And the fintech solutions that are out there will get better because they'll start moving their stuff onto these rails that make it actually more seamless. But we're not there yet. And it's not coming down the pipeline quite fast enough, I think, as everyone wants it to be, but we will get there.
Yeah, and I agree. Yeah, and there are a couple of pieces happening between the BIS, some of the projects and initiative with the Bank of International Settlements, and some of the countries. When we think about the project Agora, for instance, or the RLN, the Regulator Network Liability Network. So there are some efforts happening in order to make that move across the border, feeling as if it were domestic. But I agree, it takes time. The only thing that I think it's kind of a big win when we think about the whys of the world is like, at least as a user, I'm able to know or to see where my money is at this point, which is a big thing, right? When we think about sending money to your family and moving money as a consumer, there is a lot of psychology involved. Okay, I have to be sure that they are going to receive it or not. So something as simple as knowing exactly where your money is, showing the estimation on when it will arrive. So that is already bringing hope to a consumer that is definitely trying to solve a big pain. So at least that's something. So in the future, I think we will be with tokenizations and all the plumbing systems to be tokenized at some point between the banks and the central banks and all of that. We might see more of that conversation between my action and the system. So that is at least bringing some relief to the consumer. So that might be one step before seeing the full end-to-end movement as if it were domestic, right?
Yeah. I want to get more into ISO here, down the road here in a minute, and park that just for a second. But I have a question that's come in that I think we should kind of touch on as well, because typically these kind of go hand in hand with payments. Anytime there's a payments discussion, there's talk about fraud and AML and the significant risk in the payment industry and what key challenges organizations face and understanding controls and these risks. So let's maybe jump into this one. There's one here where they're wanting to kind of get into that aspect a little bit more. Also, what are some of the strategies and technologies that are providing more effective in combating fraud and ensuring robust AML and compliance and whatnot? Let's kind of spend a little bit of time on that. Is there one of you want to take that one up and we can kind of jump into that and kind of go back and forth? Thoughts there?
I could say one word and let Gretchen, take it from there. I mean, machine learning, right? And artificial intelligence, like that is where any bank that's not looking at that and pursuing that is going to have a huge problem. And it's not one of the things I caused a little bit of a stir at a board meeting I was at, because it was about instant payments and they were going on and on about fraud. And I was like, guys, red herring. Like, yeah. We don't have to worry about fraud until we have volume, right? There's no fraud if there's no money moving. So but it's not just about instant payments. This question is actually phrased correctly. It's about payments in general. There is fraud. There's lots of fraud. Obviously, we saw that with Zelle, right? It's not exactly instant payments, but there all of a sudden was this huge increase in fraud. And fraud's a very difficult one because you want to combat it because nobody wants their money taken away, but everybody wants a seamless experience and they don't want any friction in their payments, right? So like, how the heck do you do both where you have like no money goes through, that's bad money, but also no friction? It's really, really difficult. And I truly feel like the only answer is invest and grow in your machine learning, moving into artificial intelligence solutions. It's the only way to do this where there's the least friction, because it's just running and it has to be on a really good technology. So you better be looking at solutions that are built in the cloud, that are built high performing, that can consolidate tons of data and look at it really, really fast, right? and then get your answer, so that payments that are deemed good with good scorings go through like that, and the ones that don't are alerted, and you don't have tons of false positives, because then all of a sudden the friction comes back in. The other piece is collaboration, consortiums of data, right? Form 3 did a proof of value in UK, which we will implement in the US as well, where we had a few banks. They all shared their data with us. So to the point that it's not just the US, they were not going to share their data with each other. They were like, absolutely not. But they would share it with a collaborator. So the data all came to Form 3. We had all the data. They couldn't access each other's data. But then we partnered with a company because, to Gretchen's point, even like a fintech, right, like us, shouldn't do everything ourselves. We are best in class for bank processing, for connecting to schemes. We're not best in class in machine learning. So we partnered with the company Fizai, actually, and they're doing, that piece of it. But at the end of the day, we produced results that were far better than what any bank could do by themselves, because a bank by themselves is looking at their own data only, and they have whatever solution they've picked or built to do their machine learning. So this was like a great example of where best technology, collaboration, and consortiums of data gives you the best results. And that's what we need to implement here in the US as well.
Yes, 100%. The consortium model, when we think about companies like Sardine or others, Arcosel Labs, and some of those, it's the only way. You kind of elevate yourself, you see more data, you're able to train the systems even better. And there was this announcement a couple of weeks about the collaboration between Capital One with Adyen and Stripe. Like, it's like, okay, even though they are competitors somehow, it's like, okay, let's come together to try to solve this that is bigger than all of us, right? So I agree with that. And a little bit of that interchange is also happening with other players, like at the TCH level. Like, am I able to read some other signals that are not only on RTP, but even with other faster payment solutions? So can I train myself in a smarter way? So I think that's also something that might be happening as well. And I think the other piece is thinking about fraud as from the contextual standpoint. Like, it's not, oh, fraud is there and that's it. No, it's intrinsic in every reaction. Like, okay, if let's see, I have a user that is, I don't know, receiving $100 and is suddenly sending a check for $100 or a bigger amount. It's like, okay, there should be a red flag here. So some of these systems are happening in parallel. They don't talk between them. So how can I bring a conversation to be contextual, to be again in the middle of that orchestration again? So some of these elements are critical in order to be smart with the decisions and with what you do or what you don't. So, but definitely, yeah, the collaboration. And what I always think is like, again, banks are quite regulated for sure, and talking about AI and all of that is such a big deal. And it's like, well, but the bad actors are there using those weapons, and we try to go to where we're going with, I don't know, a plastic knife, while these guys are literally using canyons. Like, how is that work fair, at least? So that analogy is something that I'm always trying to bring to the table and try to find a solution. But it put us in a little bit of that disadvantaged position. But how can we change the game? That's a bigger thing.
That's a really good point. That disadvantage. Like,
Yep.
the bad actors are not regulated. They can
You
do
always
whatever
feel
they
like we're one
want.
step ahead, right?
Yeah.
Yeah.
Sure.
No, that's great. Thank you for that. Let's we touched on fintech a little bit, but Miriam, let's go a little deeper in fintech and their access to the payments infrastructure, kind of what exists in the US, what doesn't, what are some of the options. Let's spend a little time there.
Yeah, I mean, fintechs, I'll be optimistic. No, I mean, I think we have, I will. I think we have a lot, right, in the US. We do. We have a lot of innovation. We have a lot of players out there. We have a lot going on. I think if I focus specifically on instant payments, we need those fintechs to do more, or we need more to come out of the woodworks, right? I just always think about like ACH and how much is built around ACH. It's not the Fed's ACH network or the clearinghouse's ACH network that like makes ACH happen. It's every solution that's built out there from the thousands of fintechs and companies that put out different payroll systems and different innovative, solutions to do bill pays and things like that, that made it the billions and billions of payments that go through this annually. We need that to happen more, I think, on the instant payment world. Of course, chicken and egg, it'll happen slowly. But the innovation that the fintechs provide, and to Gretchen's point, it's a partnership because it's not really competition. It's different product opportunities that they'll put out there that banks can take advantage of, because we are still a banking world. Our rails are only open to banks, right? So that's a limitation if you talk to the fintechs, but it's not really if you think about it broadly. So I'll talk about ACH and even FedNow RTP and how we can enable things for fintechs, but also it's still banks, right? So banks are the only ones that can be participants of those networks. That's just the reality. And there's good reason for that, quite honestly, because we just talked about it, right? Banks are regulated. We don't really want bad actors getting involved and accidentally getting into systems and stuff, whereas that might be able to happen more easily if it's not on a regulated, supervised, banking institution. Banks are insured. So you've got consumer protection there. Like, there's a reason for this. I know I sound like a Fedi because I came from the Federal Reserve, but I truly believe it. There is a reason why this is good. That being said, can be really limiting. So if you think about ACH, just because it's a bank, there is a sponsor bank model. There are lots of large corporations and fintechs that directly enable their ACH files to be sent, to be received, et cetera, through a bank sponsored. So they have a bank account, they have a bank who has the plumbing, and then they can do it all directly. You can kind of enable this on RTP and FedNow. So Form 3 is enabling this model, especially for some of the fintechs that we work with who want to use our APIs, because again, they don't want to use, and I won't name names because then I'll get in trouble, but bank X large corporations integration method that's not even API enabled, or bank B's that is API enabled, but it's like this outdated. They want to use a best-in-class API that's modern and fast and multi-cloud enabled and all of that. But they want to use it for multiple banks because they have multiple banks that they work with. So we do enable that. Like, you can use our one API. Those banks work with us. We have a sponsorship with them. We send them through the API notification. They can approve the funds. They can make sure it's good. And then you can easily interact back and forth with FedNow or RTP. You're not the signed participant. You're the customer of the signed participant, but really they don't care, because from the perspective of the technology that they're enabling and how they're making it work, they're seamlessly interacting. They can enable things for their customers. They have a bank account with that bank, and it all flows. So there are really ways to make this happen. I'll touch briefly, though, in the UK. So FPS does allow fintechs to connect. So we personally, Form 3, get this all the time, like especially me, because I had a product for the US versus UK. Every single one of our UK customers who's a fintech is like, oh, can I talk to Miriam about, RTP and FedNow? And I'm like, sure. We're going to have to do this a little differently. Like, you can't be the signed participant. So it really becomes more of a risk compliance question for the banks. That's what happens here. Whereas in the UK, it's enabled. So the fintechs themselves are liable and they take on a lot of the responsibility because they are the participant. They still have a bank, by the way. They still have a bank account where there's an account, but it's that liability piece, right, that they are now responsible for. In the US, that's something that has to be discussed in more detail. And we work that through with some of the banks that we support, because really they are on the hook. From FedNow and RTP's perspective, they are the liable party. They are the participant. They are the ones that have to follow the rules and all of that. So there has to be a lot of good discussion, contracts, et cetera, with the fintechs to enable this model so that they will enable it and open it up to. And the fintechs don't love that because that limits them, right? And they have to do all this negotiation with the banks. But it's not doable. I think that's like the main message I want to get out there. Everyone's like, oh, well, fintechs aren't enabled in the US. Like they are. You have to do it differently. It takes a little bit more work, but fintechs are enabled here. So they can pursue this. And I think if they do, tons of opportunities and products that they'll open up. I think I felt a little passionately about that one. Sorry.
That's great. Oh, well, and I don't know if you guys have been looking at the Q&A. You're getting a lot of love from the audience, as you should. So let's keep this going. I don't know if you guys have, I know we've been talking a lot about banks and the banking industry and financial services. There is a question, and I don't know how deep you guys want or can go into this, but there is some questions around the healthcare industry and a point of view or perspective there. Any thoughts or ideas there that we can share with the group?
Yeah, I think it's such a beautiful point, because I don't know if you guys or the audience is aware of the impact of the healthcare. The healthcare represents around 17 or 18% of the US GDP today. So that is a big number. So And again, the cost and everything, it's definitely increasing, or at least becoming more complex to reroute the payments and all of that. It's an industry that is definitely very reliant on checks. And it's, again, the numbers I was mentioning before, the 40%, it might be even bigger in the healthcare industry, right? So again, the conference that I was attended at the beginning of this week, there were multiple healthcare companies and hospitals and all of that, and they were talking about the complexity in terms of, again, orchestration, right? How they reroute the payments, how they accept in a way or the other to be more cost efficient. So that's definitely happening. It's a big thing. And there are a couple of other things that we might be seeing at some point. I know back in the days, JP Morgan acquired one of the healthcare payment platforms, Instamed, I think is the name, and that's probably representing 20% of all the healthcare payments. So there's definitely this intersection between banks trying to be appealing to the specific sectors. So that's that definitely happening. And there's one thing that I think it will be quite interesting when we think about disbursement to patients, right? So if at some point we see players like the TCH probably integrating more friendly options, like imagine something like a Zelle integration, so we can send the funds from the hospital to a person. So I'm able to find you as Gretchen and Zelle.com in case you guys want to send me some money. But no, like if I can find you directly like this, it's like, wow, imagine the disruption. And I can actually do that query, find you, and even show you like, hey, let's say Miriam, you have $65 from your reimbursement. Do you want to get it now with opening an account with XYZ Bank? Do you want to get it as a gift card? Do you want to just use ACH and send it to your bank? So imagine if I'm able to actually have a conversation with the hospital and the financial institution. That might be a game changer as well. So definitely the instant phone availability. So hospitals and institutions can wait until last minute to push the funds. So that is changing the treasury game and all of that. Being able to have a conversation with the client and bring some of the acquisition power at some point, and definitely all the reality around orchestration and being more efficient with cost and duplicities and all of that. So it's fascinating, the area, and I'm definitely taking a deeper look at all of this. I was reading some reports on payments had come about some of the small businesses that work in the healthcare industry. They are definitely leveraging real-time payment 60% of the time, which is a huge number versus the total numbers that I was mentioning before. That is around 1 or 2%. So the interest is definitely there. And it's more about how can we actually make this a bigger reality. So the fact that we are treating with such a sensitive topic, and if we add health plus money on top, is like we can go definitely very stressed. But if at least you make my life easier, I can definitely feel better as a consumer. So let's bring some of that humanity to the industry. I can't wait for those things to happen, to be honest. Yeah.
Yeah, I think it'll be a huge help in that area. It probably says a lot about me that the first thing I think about is insurance payments and claims. And to Gretchen's point, like it's all check now. But every once in a while you get like the one insurance company or bank that like says like, I'll send you a Zelle payment, and it's so amazing. And you're like, oh, awesome. But Zelle has limits. It's not really instant. Like that's just the reality, right? It feels instant to end users, but it's not. And it's got really low limits and stuff. So I think as they can move to RTP and Fed now, they can enable more and more of those payouts, the ones that actually really matter, really impact people. And that's just it. I mean, it's just a benefit to the end users and to the consumers and to those who are in a situation where they were hurt or something and they need that money back. Like that, not to sound very naive and whatnot, but like at the end of the day, this is about people. So I think the healthcare industry is huge because there's could be use cases there that really impact people for the better to take advantage of this. So just support what Gretchen said. I think it'll be a great area.
Yes,
Absolutely.
and I'm just remembering one thing that I was reading at the beginning of the year. That is something like when you get the calls from the collectors, right? It's almost like 40% of those calls are happening just because the systems are not updated. Like, I already paid for this, but I'm still getting those calls from this person bothering me to pay again. So the CDPP have been receiving multiple complaints around that, and imagine if on top of everything I already pay, and then I have to be justifying how I pay. So perhaps with other opportunities like the ISO 222 and all of that, I can have an enriched invoice that I pay, so I can tell you, like, don't call me again. Like, I already did this. Here's the receipt of all of that. So hopefully we can bring a louder voice to the customers that they can deal with other issues that are not only about the payment part. Yeah.
We're coming up on time, and I did say we'd come back to ISO. So there is a question here around ISO 20022, and looking at it, more from a compliance perspective versus generating new products and revenue perspective. So Gretchen, if you can maybe elaborate on that, and then Miriam, let's get your point of view as well to kind of close out the session.
Yes, definitely. I just want to add that that's one of the things that I think it's going to also change the game a little bit. Like I was mentioning, if I'm able to have enriched invoices, if I'm able to kind of get a set of data and understand where our users are, like what is the type of let's say the type of products that they like to buy, like when, etc. Imagine if I'm able to actually connect with the merchants and kind of offer those insights so they can be more contextual at the time of the point of sale and all of this. So it's almost like bringing an extra layer of intelligence, so we can be more intentional when we have the conversations with the users. And again, in terms of redundancies, efficiency, and all of that, this will definitely make our life easier from the banking and money movement perspective, even between rails. No, so if I'm able to kind of have a bigger picture, and I have wires already on ISO, I'll have the ACH, the RTPs natively on ISO, so I can bring a more solid view of the reality, and I can even build dashboards and tools that will allow my clients to see the reality of what is happening with the transaction. So it's, again, bringing some light to the reality and being able to speak the language of data in a very intentional way. So that will be the real game changer there. And again, just the beginning of all those conversations, how we can monetize those pieces, how we can bundle that with other realities. That, let's say, if I'm able to have let's say a request for payment, so you can pay your bill and I can see at the exact moment that you pay it where your money is, and all of those, that brings enriched experiences and enriched opportunities for the whole ecosystem, and we all win if that's the case. But again, we need discipline and understanding and having the real standard, not the standard ish of the reality that Miriam was mentioning. Yeah.
I think Gretchen wins the banker award again for like what every banker should say. I mean, the point of the question and the problem I see is, because we talk to a lot of banks, many of them are looking at it just from a compliance perspective. It's really a problem. It's like, okay, how do I get Fedwire and ISO by like doing some translator that might drop, like, and they're not at all looking at everything Gretchen just said. Like, there's a lot of opportunity if you actually look at this by implementing it in the right way, so the right data can move, so you can open up products, so you can monetize on this, so that you can like do so much more and make things so much easier. The healthcare example that Gretchen brought up. I think in RTP and Fed now, because it started on ISO, there are more innovators and fintechs looking at that. Like, it started with the data. So it's like, okay, how do I take advantage of this? Because that's what they're looking at in general. With Fedwire and chips, I don't think so. I think really they're just looking at a tactical, like, got to do this or I'm in trouble. So how do I do it in the simplest way? And they're not looking at like this opportunity to modernize their entire wire solution and system and make cross-border easier and just like take advantage of everything. And they're going to miss out. So it sounds like as Gretchen's doing it, she's looking at all of that. So she's doing it right. But I think that what we're going to see is many banks are going to do this and then have to do another project to actually implement it correctly and take advantage of everything that ISO is offering and all the data that can go back and forth. So we're going to see like two phases of it, is my prediction.
That's correct.
Absolutely. Well, great. Well, Miriam, Gretchen, thank you for so much. It's been great conversation. I've enjoyed it immensely. I'm sure our audience as well has. So appreciate you guys taking the time out today and sharing your perspectives and insights.
Yeah, thanks, Brett. We did warn you that we talk a lot, so
That's all right.
Yes.
That's good. That's what makes these things work.
That's great. Thank you. Have a great day.
bye.
Thank you. Bye-bye.
Thank you.
Yeah, it was an incredible session, really, very insightful. Thank you, speakers, and special thanks to Brett. We appreciate your willingness to come together and share valuable insights. Just to wrap up today's session, we extend our gratitude to our community partners, the esteemed speakers, the moderator, and the attendees who participated in this conversation, which provided a platform to knowledge enrichment. You know, if you feel you missed something and wish to look back at the session, let me tell you that today's event was live on our company's YouTube page, so you can see the recording anytime. Furthermore, if you are looking out for recent technological updates and advancements, don't forget to log on to our website and social media channels. We'll share cutting-edge topic discussions, details, and announcements of the next events, which will help you register and attend them. And before we wave a goodbye, we thank our knowledge and innovation partner, InfoVision, and technology partner, Digit 7. To understand more in depth and connect with them, you can go through their website, www.infovision.com, and stay up to date with the technological advancements. Well, there is much more in store for this year with focus on banking, finance, telecom, retail, supply chain, energy, and more. So I request that you stay connected with us. It was a pleasure bringing this session to you, and we hope that you enjoyed it as much as we did. We look forward to having many more sessions with you. Till then, take care and good day.
Thank you.
Thank you.
Thanks, everyone.